Hello guys, and welcome to another deep value video. Today, taking an in-depth look at the Goldman Sachs Group, Incorporated, an American multinational financial investment bank and financial services company. Goldman Sachs, I think you've heard of it, is a pretty big company. It is the second biggest investment bank in the world, so it's by revenue, and so this is a very well-known company. Now, first, let's start with their price to earnings. It is 12.2. Their payout ratio is pretty good at 31.5, giving a dividend yield of 2.38%. Their business metrics also look pretty good. Return on equity, which is the most important for banks, is 11.7%. So this is very good. Now, let's go to grants valuation. Putting in the estimated earnings per share for the 2025 fiscal year and putting in a 4.5% growth rate, we get an intrinsic value of $502. Now, we can see that their historical price to book value ratio has hovered around 1.09, so they're trading above the historical average. Now, let's compare with JP Morgan Chase and US Bancorp, so two competing banks. We get a stock price of $442, a bit below the current price. Now let's see the return on assets analysis. We can see that they're a bit below their competitors. And next, let's go to the dividend discount model. The dividend discount model, I put in a 4.5% growth rate, the same as in the grants valuation. And we get a DDM price per share of $350.18. But if I think about it, since they only have a 30% payout ratio, I think we can put a 4.75% growth rate because it makes much more sense. So they can slowly increase their payout ratio over time. Now their assets under management have grown with an 8.1% CAGR of the past 5 years, so from 2020 to 2024. And now calculating the output of all of these five metrics, we get an intrinsic value of $441.88. Applying a 15% margin of safety, of course, we get an intrinsic value, an acceptable buy price of $375.6. So the company is trading, definitely trading at a premium, but this is not that big of a premium. If their business does not suffer a huge hit, for example, a huge recession or something like that, this bank is simply just slightly overvalued because their price to book value is 1.31. And this is not really that great because banks should only trade very near to their book value. When they get a premium over that, then there really aren't that many growth prospects for their stock. So yeah, I believe that Goldman is pretty close to uh, let's say a 15% premium. If you believe that the economy is going to go great and they can keep the premium, then sure, they're a buy. But in my opinion, I think you should wait for them to drop 20% or 15% and then you can buy them. Now to end the video, I'd like to talk about our affiliate for today, Ticker Data. Ticker Data is actually the tool I used for making this video. So you see all this template for analyzing banks. This is for Ticker Data, from Ticker Data. So this is a great tool. Also, Ticker Data offers not only many spreadsheets, but as you can see, it offers real-time financial data. It offers this price chart here. So all of this is just automatically inputted. So for example, if I put in JPM, you can see here how it's all loading up because of Ticker Data. So this is a great tool. And I suggest you check it out in the link in the description below. It is pretty cheap. So I think you'll actually like it if you just try. So I recommend it. So also I recommend checking out my blog from the link in the description below. I will soon post another article on the US market bubble and on a comparison to 2022 and how 2022 can give us many lessons on what we can do this year. This has been it for today. Hope to see you in the next video. Bye.